After a stunning rally on a Friday, Wall Street indexes went down on early Monday. And this time, the US stock market is not the only one to suffer from risk aversion. Global investors are shifting focus to safe haven assets, and they are gaining ground. Crude oil has surged again. Geopolitical tensions are setting the tone in the global financial markets. This time, investors are selling risky assets, not because of economic events, but due to the military conflict between Israel and Palestinian Islamic group Hamas. The shock attack over the weekend alarmed the global community, and today investors are revising their portfolios. For a start, let's sum the results of the previous week. The benchmark stock indexes closed with a decent growth despite the fundamental background. After a fall on early Friday, the major stock indexes made a turnaround and closed with confident gains. As a result, the Dow Jones climbed by 0.87%. The Nasdaq jumped by 1.6% and the S&P 500 added 1.18% to close at 4,308 points. On Monday, risky assets had to pull back due to geopolitical jitters. Futures on the stock indexes traded in the red in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 4,268 and 4,304 points. US stocks grew on Friday, with the high-tech sector taking the lead. The rally happened before the closing bell as investors gave priority to slow down in wage growth, but not stronger than expected hiring. Initially, stocks fell in light of the US non-farm payrolls for September. The report showed that employment in the US public and private sectors grew to the most extent in the last 8 months. The number of jobs increased by almost 300,000, twice higher than projected. The report also logged a decline in wage growth. It might be explained by the fact that most jobs created last month were in low-paid sectors. The data softened investors' nerves. On a Monday, futures on the stock indexes went down because the escalating conflict between Israel and the Hamas group agitated financial markets and investors rushed to safe haven assets. Amid fears that the simmering conflict could spread over a wider area, crude oil, gold, the US dollar, and other safe haven assets are winning favor with investors. Moreover, any evidence of Iran's involvement in the conflict will prevent lifting sanctions and affect nearly 3% of oil supplies to the global market. The Wall Street Journal reported on Monday that Iran teamed up with the Hamas for a few weeks to orchestrate the sudden attack. Bids on gold and treasuries were modest because the bond market in the United States is closed today on the occasion of Columbus Day. The stock market is wavering between dips and gains. The stocks of energy companies such as Chevron, ExxonMobil, Marathon Oil, and Occidental Petroleum jumped by almost 3% each in the New York pre-market. United Airlines, Delta Airlines, and American Airlines suspended direct flights to Tel Aviv. Their shares dropped by 2% each. Gold mining companies Newmont and Barrick Gold, listed in the United States, leapt by 2.4%. Shares of defense US companies surged by 2.9% and 4.7%. The VIX index, which serves as the barometer of fear on Wall Street, grew to 19.10 on the back of investors' concerns. This week, investors are anticipating a series of macroeconomic data, a consumer price index and a producer price index for September, the Fed's minutes for the meeting in September. The content of the minutes could give a clue as to whether Fed's policymakers are poised to keep interest rates at the current levels or resort to more rate hikes. Later on Monday, investors will turn attention to remarks from a Fed Vice Chairman Philip Jefferson and the Vice Chairman for Supervision Michael Barr, but their comments are unlikely to have much impact on the stock indexes given the background of the day. The quarterly earnings season will kick off this week with the major Wall Street banks, but geopolitics may limit the market's reaction. JP Morgan, Wells Fargo, Citigroup and BlackRock will report earnings. Among individual stocks, Tesla lost 1.9% before the opening bell as sales of Chinese-made electric vehicles slumped by 10.9% in September from a year earlier. In the currency market, the US dollar is taking advantage of the geopolitical tensions. Its index eased the pace of its growth to trade at 106.30 before the opening bell and 0.3% up. The index is likely to trade in the intraday between 106.0 and 106.7. All safe haven currencies, including the yen, Swiss franc, and the US dollar, went up, though commodity currencies also found support. The economic calendar is empty at the beginning of the week, so the US dollar will rely on the information background. The Canadian dollar received a boost from the rise in oil prices. The USD CAD pair was trading at 1.3637 before the opening bell. Currency analysts suggested that the most reasonable short-term strategy is to open short positions with the targets at 1.3641 to 1.3578. The crypto market is trading in sync with the risky assets. Cryptocurrencies came under selling pressure. Bitcoin slipped to 27,490 before the opening bell. Despite the slide, the token remained in the corridor between 27,400 and 27,750. If the price cannot settle above 27,350, it will decline to 26,650. The alternative scenario suggests another attempt to consolidate above 27,750 with a target at 28,000. The crypto market has already been bruised by the standoff with the US Securities and Exchange Commission. Today, the crypto market suffers from a global risk aversion. Bitcoin has been trading following the opposite correlation with the US dollar index. All other digital assets followed suit. Make profits with the InstaForex. Feel free to leave your comments and ask any questions. See you online tomorrow.